Hey everyone, this is DayTraderRockStar for DayTradingRadio.com, and this is a market radar for May 25th, Friday. Yesterday I put out a market radar for a 3-star update, actually a 3-hour update, which is the strongest of the bullish factors, and basically everything played out pretty much to a T. We had a little weakness earlier in the day, but we rallied strong at the end of the day, and we ended up closing a little bit higher. And that's what we look for a follow-through day. A lot of people ask me, what's the target? What's the size? What's the definition of a follow-through day? And a follow-through day is actually basically a stock, an index market that's making a higher high. So, we got that higher high. And once you get that follow-through day, it's really, that's the signal. It's triggered. It gives you the positive results. From that point on, anything can happen. You could actually see that reversal happen a latter part of the day. But because of the situation, the way we closed on Tuesday, going into Wednesday, it was very bullish. And then again, we've seen how Wednesday played out with a nice reversal candlestick, and then and going into Thursday, we look for that follow through, and it leads us up to Friday. Now Friday, we're going into a holiday weekend, and there's definitely more negative sentiment in the markets than positive, and everyone's going to be talking about not being long, not carrying anything into the weekend. Anything can happen coming out of Greece, and it's mainly Greece. It's still on the table. But I still say that I still have a bias to the upside, believe it or not, going into Friday. Now, historically on the almanac, 7 of the last 10, I believe, according to the Stock Trader Almanac, were down on this Friday in history. So history's not going for us, that much in this situation, the Friday before Memorial Day. But because of the situation, the light volume, I think they could actually move this one up a little bit further just based off light volume. If people are going to be out of this market, they're going to be out today, and tomorrow amateurs are going to be, pushing the buttons, and there's usually a buy-side bias on that. So I would have to say, looking at tomorrow, and I'm going to break down this chart more because I want to explain how we noticed. Everything started on Sunday, and on Sunday night I was looking for the beginning of a relief rally, and it was really based on the negativity going into Friday. And Friday led to that Sunday night call saying, watch for an overnight, futures move up. And from that point on, we had a nice move, and then we had a consolidation day and then a reversal. And that reversal led for a follow-through day, and we're going to go into possibly, a follow-through day tomorrow, further push higher. But things are a little more cautious. I wouldn't give it a 3-star, a 3-hour update. I would give it probably a 1-hour update. Possibly 1.5 if I actually did 1.5. But let's just take a look at what we have in front of us. We have the oversold daily stochastics, and you look back at recent history when we did get oversold last, and the oversold for me is underneath the 20 mark. So once we break down, the last time was on April 10th, and then from that point on, we could zoom out a little bit further. I'm just working with you here, back here in September, October. We got oversold, and you could see there was decent moves from these levels, from this last level and from this last level. There's been decent moves back in November. November was really the last time, and it was about, once you got down there, it was a couple days of consolidation, then a pretty decent sized rally. So the signals work more than they don't, and that's one thing we take in consideration when we talk about a high probability setup. High probability setups are more likely to play out when certain indicators are lining up, and it's simple as that. Why get the emotional side of things here? If this thing works 8 out of 10 times, then I want to take it. All right, so we go back to 410, and we just take a look at that same situation. But what we really are keen in on is the 60-minute chart these days. So a 60-minute chart is going to give you a better indication of this type of choppiness. You might have a nice move up here, over a few days, but look, you have 2 days up, one big down day, another down day, a big day up, 3 days down, so it's been very choppy, and that's where you go out on that 60-minute chart. I'm going to go out to 410 on the 60-minute chart, and I'm just going to scroll back here to 410, and I marked it out already because I wanted to know what it was, and this was it right here. Let's zoom in here. This is 410. You can see we're oversold on the 60-minute stochastics, and because of the oversold 16 daily, became more of a high probability setup. Once we started breaking higher here, you have that momentum. And when we talk about, there's a rule that I use. It's just like it's the it's the bounce, first rotation bounce after an embedded stochastic rule, meaning that once you kind of come out of an embedded stochastic, a sustained downtrend where it pins the stochastics down and was just very bearish. Once you come out of that, you break that channel, you get a nice break up here on the stochastics, and you start to make that rotation back up into an overbought level. Once you get up there, you could see how the market reacted exactly to that level. And that level came into about 412. And then from that point on, we pulled back, and we pulled back here until we got oversold again. And at that point, we started getting oversold. We were still holding off a recent price level. So this is what we call a stochastic price divergence. Normally in a downward trend, as the stochastics get oversold, the price makes a lower low. And so there was a good possibility of a move back up here because we started to see that divergence happen already. So we go back to now what we're looking at going into, tomorrow we had basically the same situation. The rally on Monday, going into Friday, it was an embedded stochastic indicator, which is the first criteria after an embedded, downward push, 3 to 4 days. That first 180 reversal, you look to buy. That's really the rule. You look for the first move up and the fast return. It's very rarely you go embedded here, go up here, and go embedded here. The market doesn't work that way. This is showing the real fear and the real sustained selling. So that's part in here. Things just don't turn around that way. So you have to make it look like, you have to really take this signal as a very good, higher probability signal, because it doesn't normally, you don't go from you don't go into this bearish state back into a super bullish state. So that usually that first signal really plays out, and that's when you either retest the lows or it's a fake bounce. But the majority of the time you're going to get that pullback, and the majority of the time that first 180 you're going to get a bounce. So we actually called this bounce going into the 60-minute chart. It was just everything we're following on the site, and this is where we leave off going into Friday. And the 60 minutes actually continue to be quite bullish. So the combination of just being a holiday trade, light volume, still this bullish activity, Greece and Italy and Germany, news over the weekend, everything out there. You're starting to hear chatter of maybe wanting to keep Greece in this, and they're going to have to do this and that. And I think there's any positive news that comes out of that, and again, a lack of news going into the weekend and coming out of the weekend, a lack of news, this market's going to gap up again on Monday or Tuesday. Actually, it's a holiday week. So again, there's a slight bias to the upside, and that's the radar going into Friday. Should be a lackluster day, but it'll definitely set up. I'm going to have a watch list going out over the weekend too with the good setups, and it's going to be a very special one. I think you're going to enjoy that. All right, just a couple of stocks. I just want to review the MDT trade we did. It was kind of an overnight trade, but we went into this from the 10 for 1,000 watch list. We talked about the 60-minute chart. And how we're going to concentrate more on the 60-minute chart. Oh, actually, this was over on Wednesday's watch list. I was talking about the 60-minute chart, actually, and how to keep us out of more of the chop and to, understand that the rallies are not being really extended or being sold into. So we want to be faster. So we want to really react off of these signals on the 60, meaning, exactly. Want to be long when the stochastics are oversold, or want to be taking profits or short when they're overbought. Simple as that. You look back at the charts, you cannot argue. There's no way you can argue the directional trades. Every so often, maybe once in 10, 12 times, you get a flat line, and very rarely do you get the total collapse. But if it might move up here, and it's just a lot of choppiness, and there might have been some news out there. It's really tough. But normally, again, when you come out of that choppiness, you start to rotate real fast back in and out, and it's usually a day from getting the signal to just about a day. Sometimes it could go into 2 days. It depends if you get it. Start to jump the signal a day early, and it kind of stays there a couple of days. But normally it's within 2 days you start to see the reaction off of that signal. So if you feel comfortable, the 60-minute chart's a great vehicle to use. So we got into the Medtronics trade just based off of the 60-minute pullback, and it ran perfectly. I waited all day for it, got into it, and we had to follow through day today, and I took profits into it. So U.S. Steel, another great setup here, and again, I always want to do so much on these videos. This is an important educational area too that you want to pay attention to, because the market's so under the microscope. You see a little bit of selling coming in the market after you've had a okay, everyone thinking is running to the running for the door and stuff. It's just the fear is still there in the market. But what we have to remember is, until a chart tells you otherwise, until a trend is broken, then your trend stays intact. And most likely you could get the best value if you take a look at look at most of the majority of stocks out there and look at each range. And I would say 80% of the candles are always going to be retested, and there's going to be a part of the body that gets traded back into. So when you look at a stock that closes on its highs, to understand that there's probably going to be a retracement back in before the further move up. As long as we're not taking out the lows here, the potential of this uptrend is still here. Seeing a little selling coming in here, as long as we stayed off here, really kind of still defines this. And then you're probably going to see, maybe a further push up tomorrow and stay within this boundary. If we start to break down, then the market's really going to show that weakness, and you have to really take that. So tomorrow, like I said, maybe we could chop around here, but I definitely watch this reversal candlestick. It still looks good. Tomorrow would be an interesting day just to see if we hold this trend line. Because, like I said, go back to any chart, you'll see a move down, a gap up, a pullback. We closed there. We, in this stock, we traded back into the pattern, pushed up here. We pulled back into the pattern. This was in the pattern. This, it kind of broke out. It's very choppy, and you're usually 80%, 85% of the time you're trading back into the pattern. So you remember that when you take your first entries in a day. I kind of rush some of my entries because I'm on the show, and it's just like I know I'm going to end up holding it a couple of days. So it's like what I do it what I has to do it when I have a chance to do it, and but this looks good. The overall formation of U.S. Steel is going to be interesting to see if we actually maintain this small little trend. And that's another one I'd be paying attention to tomorrow. And then, of course, Scott's Miracle-Gro came up with a reversal candle the other day. And I jumped in on that one. And we actually, again, traded back into the candle today. Looked like things were weak, and by the end of the day, we were just kind of climbing back up, and we closed above yesterday's highs. And that's impressive. And we still haven't really gotten a bullish signal on the daily. So there's a lot of potential here. I just want to continue to keep the momentum moving back up here in Smith Model. And a lot of stocks are like this. So that's it. Friday should be a fun day, and I hope everyone has a great Memorial Day weekend. And I will talk to you soon. This is DayTraderRockStar for DayTradingRadio.com.